Good morning. You're watching a home broadcast of Business World Live. I'm Danny Laurel. We are still trying out our home broadcast tool, so do bear with us. It is 10:30 a.m. here in Manila, about 1 hour into the shortened trading day. But let's kick off with our banner headline top story. The IMF is slashing its growth forecast on the Philippines to just 0.6%. That is a big cut from its previous projection of 6.3% just 3 months ago. You're going to be seeing on our screens here that drastic cut in our growth projections for 2020. Now, this is also more pessimistic than the similar downgrades that we've seen already coming in from the World Bank, ADB, as well as AMRO, for example. But it is still a better outlook than what Finance Chief Sonny Dominguez has, which is a forecast of flat to negative growth, and is also part of the lower end range of NEDA's forecast range. Recall, NEDA is seeing the lowest growth at a contraction of 0.6%. Now,
via
for the
video
Philippines, the IMF
conference.
cited
Siyempre,
supply disruptions and
yung
also weaker demand from
community
our trading
quarantine
partners
levels
as the
natin.
main driver of this slower growth. But the impact will be
Joseph
partially
Morong,
offset by the government's
can
policy
we
support.
afford another
That is also
extension
under the assumption that the
to the
outbreak will
April 30
subside
ECQ?
after the second quarter. Now, the Philippines, of course, is not alone. In fact, it will be worse for the
Ganito na
rest
lang.
of the world. Now, IMF Chief
We're
Economist Gita
getting
Gopinath
more
coined the
data,
term
no? So,
Great Lockdown
number one,
Recession, which will be
mas
the steepest the
nakita na
world
natin
has seen in
yung
almost a
rate of
century.
infection
We
natin.
cut a
No?
short clip of her briefing. It
The
was
worst
streamed on the
recession
IMF's
since the Great
Facebook page.
Depression.
Let's try our best to see whether we can run this right now.
Community quarantine
The
levels
policymakers are responding in an unprecedented manner by helping
Joseph Morong,
households, firms, and financial
can we
markets.
afford another
However,
extension
there is still
to the
considerable
April 30
uncertainty
ECQ?
about what the economic landscape will look like when we emerge from this lockdown.
Ganito na lang.
So now, under the
We're
assumption
getting
that the
more
pandemic
data, no? So,
and required containment
number one,
peaks
mas
in the second quarter
nakita na natin
in
yung
most countries in the world,
rate of infection natin.
and then
no?
recedes in the second half of this year,
Since
we are projecting global growth far worse in 2020
Number
to
one,
fall to minus 3%. Now, this is a downgrade of 6.3 percentage points from January 2020, a major revision over a very short period of time. This makes the Great Lockdown the worst recession since the Great Depression and far worse than the global financial crisis. Assuming the pandemic fades in the second half of 2020 and that policy actions taken around the world are effective in preventing widespread firm bankruptcies, extended job losses, and system-wide financial strains, we project global growth in 2021 to rebound to 5.8%. Now, this recovery in 2021 is only partial, as the level of economic activity is projected to remain below the level we had projected for 2021 before the virus hit. The cumulative loss to global GDP over 2020 and 2021 from the pandemic crisis could be around $9 trillion, greater than the economies of Japan.
There you have it, guys. That was IMF's chief economist Gita Gopinath saying the world economy will see a contraction by 3% before rebounding to 5.8% next year. That is the worst we've seen in almost a century since the Great Depression. Now, let's move on to some positive news, checking in on the markets and how we are trading this midweek. Take a look at that, up by 129 points. That's 2.2% up to 5,909.64. This, of course, following a big climb that we saw on Tuesday as well as Monday when we broke below, above the 5,700 levels, closing above that level. And take a look at that, even surprising a lot of analysts here who had said profit taking might ensue. Yesterday, we already saw the highest level we've seen in our board since March 13, and we did rally along the rest of the region. Now, what is driving this positivity? one trader from Timson Securities is saying that this was on the back of better than expected China trade data. So they did report export and import figures for the month of March, a big improvement compared to January and February. And you've got AAA's Chris Mangon saying this might have prompted investors to have optimism that the biggest economy in Asia is seeing quite a recovery and is recovering even faster than expected. Now, the issue here, though, is still, if you take a look at your screens here in my terminal, net foreign outflows still persisting. We did see another day of net foreign selling. That was actually to the tune of 1.3 billion pesos, a 19th straight day. You've got Manny Cruz of Papa Securities saying foreigners are continuing to flee, but the local funds are actually seeing opportunities in the drops and picking up on these declines. He does say that hope is growing because of the infections of COVID-19 in Europe, let's say flattening or plateauing, plus the Philippines starting mass testing. But Chris Mangon of AAA Equities is saying there might again be some profit taking because the sentiment is still one of cautious optimism. He says investors willing to take a chance but will flee at the first sight of a reversal. Now let's take a quick peek at which sectors are pulling the local boards up this Wednesday morning. All sectors in the green, led by mining and oil, that's up by 5 and 3/10%. But take a look at financials, that's up by a hefty 4 and 7/10%. That had been rallying, according to some analysts, on the back of a lot of announcements from the central bank in terms of easing policy rates there. But you've got everyone else from holding firms to properties, industrials, and services enjoying quite a rebound there. Now, we will take a deeper dive into the markets later on. Meanwhile, let's check in on other headlines we're following today. President Duterte urging ASEAN leaders on Tuesday to keep trading to ensure health and food security in the region amid the COVID-19 pandemic. Now, in his speech during the special ASEAN summit for COVID-19, President Duterte said cooperation must be prioritized among ASEAN countries to boost trade as a means of mutual support. The president also noted that ASEAN countries need to boost production of medicine and medical equipment in the face of a global shortage of such goods. Duterte added that food security is important in maintaining socio-economic and political stability as countries resort to lockdowns to contain the virus. Duterte also called on ASEAN countries to continue supporting vaccine and research against SARS-CoV-2. Now, easier said than done.
ASEAN must remain open for trade. ASEAN must remain open for trade, crisis or no crisis, as no country can stand alone. Let us just therefore ensure that the supply chain connectivity and the smooth flow of goods within our reach.
Now, that's easier said than done for sure. Now, one of the country's top investment promotion agencies, the PEZA, already expecting another year of declines in investments. Now, recall that last year, the agency recorded a 16% drop in investments as tax reform proposals kept investors from pursuing projects here. Now, PEZA had expected 2020 to be their turnaround year. They had projected a 5 to 10% growth in pledges, but now because of this pandemic, it will most probably be another year of declines. You've got PEZA Director General Ching Plaza saying they have yet to come up with a number, but she did note that exporters have become one of the most vulnerable in this crisis. The UN Conference on Trade and Development warns of a, quote, rapid deterioration in global investment flows and estimates that FDI flows will decline by as much as 40%. Meanwhile, the government is setting aside 51 billion pesos, that's as a wage subsidy for some 3 million Filipinos employed in small businesses affected by the COVID-19 pandemic. The eligible workers will receive or get to receive as much as 5,000 to 8,000 pesos. The Finance Department is prioritizing 2.6 million employers that have complied with the BIR and SSS regulations, but the remaining 800,000 non-compliant firms will still get wage subsidies. This subsidy package covers 2 months and will be distributed in two tranches starting next month. And the DOF is also considering a proposal to grant virus hit small businesses a credit guarantee to provide them easier access to bank financing. A proposal for a 350 billion peso package granting negative interest loans to MSMEs has also been pushed in the lower house. It has been over 30 days since Luzon has been put in an enhanced community quarantine over the COVID-19 pandemic. Now, this extension is seen by many as allowing the government to buy some time, let's say, to craft its policy response, especially economically. And we have with us on the line Assistant Secretary of the Department of Finance, Tony Lambino. ASEC, thank you so much for joining our show today. I have so many questions. I'm just going to dive right in. A lot of economists have said that the monetary policy response has been preemptive and have lauded that. But some have said that the fiscal response was lagging behind. Can you tell us what was the cause of the delay, let's say?
Good morning, Danny, and thank you for having me. Actually, the fiscal response went into gear very, very quickly. There are several components of this. There was a loosening in terms of the deadlines. People were allowed to file later, to pay their taxes later. Although, of course, there's a request for those who can pay on time or early to do so because we need to finance this fight against COVID-19, right? But in addition to that, a piece of legislation was also passed in record time, less than 1 week after the lockdown. Congress passed the Bayanihan to Heal Reform Act, which authorized the president extraordinary powers, of course limited and time-bound, extraordinary powers to realign the budget in order to be more effective in fighting this pandemic. Now, what else happened in that short amount of time was a program for 18 million families was put in place and launched very quickly after the law was signed by the president. And in a matter of 3 days after the launch, more than 3.7 million families already received their cash assistance. So these things went into high gear very quickly. In addition, now we have a small business wage subsidy program that's for 3.4 million employees of small businesses, those that are not among the large taxpayers in the rolls of the BIR, those that are also compliant with SSS and BIR regulations, companies that have either had to stop operations or partially stop operations because of IATF rules, and for their employees who have at least for 2 weeks not been able to draw their paycheck. This subsidy has been made available. So the mechanics and the details are going to be announced very soon over this week. The registration among employers will also start as soon as the online system is launched. It's being tested as we speak. And then the employees will be receiving, those who are eligible and those who work for eligible companies will be receiving this wage subsidy for a maximum of 2 months.
Sir, let's just clarify po for our viewers here. This 51 billion pesos is in addition to the 205 billion pesos that was first put in for the 18 million poor households.
Well, this is how we sequenced it, and that's correct, Danny. The first response in terms of helping the most vulnerable was to provide these subsidies for 18 million families in the informal sector because they're under the no work, no pay arrangement. They were the first step in terms of the capacity to buy food, medicine, and basic needs on a day-to-day basis. The second group is those who work for small businesses. And if you recall, the first thing we asked the private sector to do was take care of their employees. And so many companies responded to this call and made sure that their employees were receiving their salaries, etc. However, after around a month of this extended community quarantine, we know that the smaller businesses have smaller, what do you call this, cash flows compared to the larger ones. And therefore, they also need help now, given the timing. And that's why this program was launched now. Um, the subsidy is also hand in hand with other programs of government, so there's no duplication, and we can talk about how we're adjusting for other programs if you're interested.
Sir, Sec Dominguez said we can afford this until, I mean, the program is set to be covering these people or the economy at least until the end of May. What happens in the chance, I hope this doesn't happen, that the lockdown is extended? We've seen, for example, in France, they will be lifting the lockdown on May 11, but still, bars, restaurants, businesses will remain closed until July. Can we afford something like that?
Well, there is a trade-off here, Danny, that we have to really grapple with. How many Filipinos will contract the disease depending on how much we open up? And a
Okay.
fraction of that is going to be people who will die from this COVID-19 pandemic. And so we have to balance that off with making sure that our fellow Filipinos also have the means to survive. So the livelihood and the lives, we have to balance those. And the Secretary of Finance, Carlos Dominguez, was very emphatic about that we need to make sure we are also looking at the moral and ethical dimension of that question.
Sir, we have a lot of loans because of the ambitious infrastructure program. What's going to happen to this? Can we still finance this? Sec Dominguez has said that he will not seek moratorium for such loans. He will not use this money, to finance more healthcare, for example. We need to be adamant on paying back on time. But does this not mean more tax collections for a country that's already suffering in terms of, wages?
Well, most countries responding to this pandemic will be spending beyond their means. That's just what's going to be happening around the world, even in the context of an economic contraction. It's also the case that the Philippines has been managing its debt very well. So the debt strategy of the country has performed very well from a high of 74.4.5% in 2004. We're now at 41.5% as of 2019. Which is why all these lenders are willing to loan us money because we're a good borrower, and so our credibility is very high in this space. Which is why we've estimated that for the economic recovery plan, we actually do have in place additional resources from available borrowing. Now, this is borrowing we actually haven't drawn down from, but is available to us because of our good credit standing. In fact, if you recall, Danny, last year we were upgraded from a triple B to a triple B plus by Standard and Poor's. So that's an indicator that we are a safe bet when it comes to lending.
Sir, on the tax issue, is there a risk that we might see more taxes being collected?
Sorry, Danny, more taxes being collected?
Yes, to finance this debt or the spending if we need
I
to.
see what you're saying. Given the current environment, we do expect actually tax collection to go down. If businesses and households are not earning, then there's less tax to collect. It's just the way it is. However, in terms of additional taxes, that is something to be discussed in the context of an economic recovery plan. Because that plan should have a comprehensive view, and it's an interagency effort led by the National Economic and Development Authority.
Sir, ceteris paribus, can we expect the infrastructure program to continue in this type of scenario? Where will we
Well,
get?
Danny, it's an imperative because as we know, infrastructure development has the largest multiplier effects in the economy, as long as they're good projects. And we have made sure to assess the proposals very well. So they've been vetted, they've gone through ICC scrutiny and the approval process. And so it is critical that the infrastructure program go into as high a gear as possible, as quickly as possible. Last year, we estimated 3 million jobs from the infrastructure program. And with the multiplier effects into other industries and other sectors of the economy, this is going to be a source of jobs for our countrymen so that they can get back to work as soon as possible.
Sir, is that still realistic though, especially if just in terms of manpower, do we have that sort of manpower, to keep people healthy and in the streets building these things? Will there be a delay in the timeline at least?
Well, there will have to be a dialogue, and that dialogue is ongoing, a continuous dialogue between the health and epidemiological experts as well as the economic managers. Now, these two areas have, as I mentioned earlier, to be balanced very well. As we open up, what are the health measures and health behaviors that we can mandate in order to bring the infection rate to a manageable level? As close to zero as possible, of course. Although zero is probably a goal, not really what we can get right now. So let's bring the infection rate, the transmission rate down as much as possible. Let's protect the most vulnerable populations so that the death rate also goes down. We want to protect people's lives as much as we want to make sure that people have the means in order to live from day to day.
Sir, last question before I let you go. Despite the fact that you're saying, sir, that the government will be continuing with its push, its spending push, at least for the infra program, there's still, massive downgrades when we're talking about growth this year. Even Finance Secretary is expecting a 1% contraction. Even NEDA has a pessimistic scenario. Tell us, sir, where will this contraction come from? Is that from consumption? You feel that consumption will be the one that's definitely dragging this down, even if the government puts all of these fiscal stimulus, monetary stimulus. There's going to be a lot of liquidity from the central bank. Will people not be tapping that liquidity?
Well, contraction in consumption certainly has already happened. But it also depends in terms of the sectors, which is why we did a survey, which will be followed by additional research, talking to stakeholders. There were 44,000 respondents to this survey among small businesses, and we asked them where the pain points are. And so, Danny, there are different kinds of needs in terms of the recovery. Those that had to close down completely, they will need the largest government investment. Those that had to close down partially might need access to finance, which is why, as you mentioned earlier, we're putting in place as part of the small business program, not just the wage subsidy, but also a credit guarantee. Because it's hard to come by loans these days during a crisis. But with the credit guarantee, that might open the tap a little bit more. And in addition, we're looking at those sectors and industries where they were able to operate at a scaled down capacity, but operate nonetheless. And what they need probably is this support in terms of wage subsidy, the grace period in paying loans, rent. DTI put out that rule already in terms of that grace period. And so in combination, this is a package, really. It's a holistic view of what we need for a recovery of different sectors. But as we mentioned earlier, the infrastructure program has to be part of that recipe.
Okay, thank you so much, sir, for clarifying that. That was, of course, Assistant Secretary of the Department of Finance, Tony Lambino, clarifying wage age. Thank you, sir. For wage aid, 51 billion pesos is on top, of course, of the 205 billion package already in place for the 18 million people. This will go to 1.4 million additional workers. That is this 3.4 million additional workers in small businesses. Thank you so much, sir, for joining us today.
Thank you, Daddy.
guys, let's take a quick peek at our local index. We are up by 2 and 4 tenths of 8%. So we are extending those gains, 5918.52. I just want to take a quick peek at our leaders and laggards here before we end this broadcast. It's very interesting to see which ones are standing out. Very interestingly, San Miguel Corporation up a hefty 11% really. Together with other conglomerates, you've got here JD Capital, Ayala Corp, and AGI, for instance, Metro Pacific as well. So it seems like it's the day of the conglos to shine after we have been seeing rallies, for instance, from a lot of our consumer plays. And speaking of consumer plays, you're going to be seeing Pure Gold sitting out this extended rally. But I have to say that Pure Gold is one of the 3 stocks that are in the green this year today. So possibly some profit taking coming out here. Pure Gold down by 2 and 7 tenths of 8%. I just want to highlight a couple of stocks that had released their earnings recently, but you do note that these are earnings of 2019, and all bets are off for 2020, I've got to say. But nevertheless, worth reporting. URC reporting a net income for the full year of 2019 of 10.1 billion pesos. That's up by 7%. That's on the back of sales of 134.2 billion pesos, up 5% year on year. The interesting thing to note here, though, is how is URC doing amid all of this crisis? They're saying now that they have supply chains being disrupted in Luzon, limiting their ability to meet orders. So there's now more demand than ever, but there is a difficulty to meet these orders. This is from company CEO Erwin Lee, describing the last few weeks as frenetic for the unit, which has had to adapt to the surge in demand just for basic goods and drinks. He says people now want twice the number of instant noodles as they did a week ago, and it's very difficult to deal with. So, a good problem to have perhaps for this company that has an increase in demand, but nevertheless difficulties in the supply chain. Let's move on to their sister company, JG Summit, which did report full year net income of 31.3 billion pesos. That is up 63% year on year. And that's on the top of the top line rising 3%. And they do expect the company to maintain resilience amid this pandemic. Meanwhile, you've got Jollibee. Just saying very quickly here, they had already reported the 2019 net income, which fell. But they're now saying that it fell to, let's say, a lesser extent, still falling by 21.7%, but it's now 6.43 billion pesos, slightly higher than what was previously reported of 6.3 billion pesos. And finally, you've also got Philippine 7, so that of course runs 7-Eleven. Fourth quarter net income up by 11% to just below 890 million pesos. The full year 2019, however, up 30%. Note that they did mention most of their outlets of 7-Eleven are still open during this lockdown. Now let's take a quick peek at how the rest of Asia is performing, just to get an idea of how our global equities are doing. Take a look at the US last overnight, seeing rallies, but Asia Pacific not following suit. You're going to be seeing Japan, for instance, in the red, together with Hong Kong and China. Also trading in the red. Some markets like Taiwan and South Korea in the green, and we are joining that rally, but definitely the local index outshining that today. And that's a first look into the business day. Today is April 15, 2020, a Wednesday. Thank you so much for watching. Catch us again tomorrow, 10:30 a.m. I'm Danny Laurel, and we are One News.